So you're thinking about buying your first investment property, but honestly, it feels kind of overwhelming. Don't worry, in this video, I'll walk you through how to turn your first property into a cash flow machine. Not all properties make money the same way. You have options. A long-term rental gives you steady and reliable income every month. A short-term rental, like Airbnb, can bring in way more money per night if you're in the right location. Or you can fix and flip. Buy something ugly, fix it up, and sell it for a profit. There are even more options than this, but these are just the basic ones that we see. Your first big decision is choosing which of these best fits you, your budget, your time, and your comfort level with risk. Now, this is where a lot of beginners mess up. They buy with emotion instead of math. You need to look at your rental income and then subtract all expenses associated. It's like your mortgage interest, taxes, repairs, insurance, and even property management if you don't want to do it yourself. There are many other expenses as well. These are just common ones. And here's a tip. Always set a little bit of money aside for big improvements like roof improvements, HVAC, plumbing, electrical improvements, anything in that category. That way you're never blindsided. Oh, and don't forget, tax breaks like depreciation and mortgage interest can actually make your property way more profitable than it looks at first glance. Okay, let's talk about loans. If your credit's solid, conventional loans generally work best. If you plan on living in the property, you might qualify for a FHA loan with a much smaller down payment. And if you're flipping, you might look at hard money loans or even private lending. Bottom line, match the loan to your game plan. And here's one of the most underrated parts of real estate, taxes. Seriously, the IRS basically rewards property owners. You can write off expenses like mortgage interest, depreciation, repairs, property management, and even travel if you're visiting the property. Bigger deals? You can use a cost segregation study to speed up your write-offs and save thousands. That's money back in your pocket. Finally, once you own the place, you have to manage it correctly. That means raising rent slowly over time, not scaring tenants away, keeping up with maintenance before little problems turn into big ones, and screening your tenants carefully. Last but not least, have a solid lease. That one document can save you a lot of headaches. So that's the roadmap. Pick the right property, run the numbers, finance it correctly, use every single tax advantage, and run it like a business. Do that, and your first property will be the start to real wealth. If you have any questions, our contact information is below. Like and subscribe for more content like this.